Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, October 3rd, 2011 is brought to you by Realtic. Alright, guys, let's get right into the mix. Market's having another dramatic decline. Dow Jones Industrial Average down 185 points, NASDAQ down 58, S&P 500 down 23 points, basically 2 to 2.5% drop across the board. Markets have just put in a little bit of a pivot low. Now, this pivot low, we'll have to see if it holds up. It is at a major level. You can see this little pinkish line right down here that we almost hit. That is exactly at the double bottom from August 9th, 2011. So if you go back to August 9th earlier this year, see that little pivot right there? That is exactly what we were hitting. That's called a double bottom and should be significant support in the short term. I think ultimately it does get taken out. However, in the short term, again, it may hold up, and we are getting a bounce off of that level. Notice the market here, folks. The big drop here, this is an in spirit of bearish pattern, and look at the breakdown that's coming through. Ultimately, once we take out the 110 level, or 110.30, it's actually exactly on the SPY, which mirrors the S&P 500, then you will head significantly lower as well. So again, panic because of Europe. Europe, again, just continues to have these problems. Nothing's getting fixed there. They talk about a bailout one week, then it's not happening the next day, and then the next day it's back on, then the next day it's off, and ultimately it's just a catastrophe in the making and continuing to look very, very ugly there. And the markets, again, are just selling on this stuff. All right, let's zoom back in the charts and take a look. You can see early in the day it wasn't so bad. We actually got this pop right here, taking us to the positive side on the markets. That was on the ISM number, which is an economic indicator, and ultimately it was a positive number, showed growth in the economy, but it was very short-lived because what happened was after the spike up, the dollar started to rally, and the dollar rallying pushed the markets down. You had a nice bear flag here. See this downward move here in spirit of bear flag right into the 20 moving average? That tells you there's more downside. Sure enough, the downside comes in, and significant downside as it was. Now, we have to take a look at the bigger picture here, folks, and again, we nailed the pivot lows on this market. We've nailed the pivot highs. We're just playing the swings in this market, which are making us significant amounts of money. Subscribers in the Research Center are now into their third straight week of massive profits, and the key is to look at it in perspective. Everyone else out there with 401ks, retirement, investment accounts, they're all on the wrong side of this market. Here we are banking money. In fact, I just sold my second half of SDS today, which is a 2-time short ETF on the S&P 500. I posted it in the Research Center under the Hot Charts and Alerts, which is part of the free trial if you take that. And again, right up here at 26.62 from my average entry of 23.82. That's an 11.5% gain essentially on the SDS in basically 1 week. 1 week, 11.5%. Think about that in terms of dollars. It's an amazing move while everyone else is taking hits out there. Members here in the Money Stocks are multiplying their dollars. We had people making literally hundreds of percentage points on options last week. Individuals last month made as much as 30% in their portfolio just in the month of September. And again, we're just going to continue to do this till the end of the year into next year, and we're going to keep it short term. What does that mean? Well, short term means it's swing trading. You're picking up a stock and you're holding it for a few days to a week or so, and then you're unloading for 5-10% gain. Then you're reversing your position, going the opposite way, because that's the way the market is right now. And again, I still have one short left out on the table, which is MasterCard. MasterCard down about $1.30 today, so that's great as well. If I go to the daily chart of MasterCard, look at the breakdown here, and this is going to go significantly lower, so I'm going to hold my second half with a break-even stop. My short entry was 341 and a quarter. I repeat, 341 and a quarter. It's now trading at 316. I mean, think about the gain there. That's a $25 gain, $27 gain or so far. I already took half off for $27 last week on Thursday, Friday, and I'm going to let the rest run, hopefully for 40 to 45 buck gain on this. This thing should go all the way down to about 290 before it hits significant support, and that will be right down in this vicinity on the lower end. And again, notice the breakdown below the 50 moving average. No confirmation yet. We're watching to see what happens there. MasterCard's having an okay day considering how big the drop in the markets is, but ultimately this should head much lower in the not too distant future. Now again, we have to start saying to ourselves, listen, if we're swing traders and we've been short the market, is there going to be a point where we're going to go long? And there is going to be a point where you're going to get a significant bounce. We're calculating when that will be. We will release it, and I will pick up longs myself. And again, if I post a long or if I take a long, I'm posting it in the Research Center. If you're a free trial member, and by the way, there's a 7-day free trial to the Research Center and the Intraday Stock Chat. No obligation. You come in. A lot of members make enough money in that 1 week to really belong for years for free to our service and just pile on the money at that point. All right, now let's go back to the spiders and just continue to watch. You are getting a significant bounce here, and again, not surprising because, again, we kind of tested this low pivot here, which is a double bottom from August 9th, 2011, so that has to be anticipated, and now the question is, how much of a bounce do we get? Do we retest the lows? Do we go back below the 110 level or so and pierce that even number? And again, we're going to start replaying that this afternoon and figuring out exactly where it's going to head. Now, a couple other things to go for here, and let's just take a look at a couple other charts. Morgan Stanley getting hammered again today. Take a look at this chart. Unbelievable to see this type of drop all the way from 31 and change to now $12 on Morgan Stanley. There are rumblings that these guys are going to have major losses. Goldman Sachs, JP Morgan, not quite as bad as Morgan Stanley, but nonetheless, look at Goldman Sachs. New 52-week lows again. I was talking about the daily chart here to members in the chat room today and where I'd be a buyer. And to be honest, right now you have a little bit of support at 85, which probably you get a bounce around the $85 level, probably for a good $5-10. But then ultimately you're probably heading down to about $74 to $73, and then possibly all the way down to these pivot lows. These financials are not done going down. Again, the question is, will Greece get bailed out? I mean, it's all about Europe at this point, all about the dollar. Let's take a look at the UUP just to show you, and look at the significant gain on the UUP here. We'll go to the intraday chart. And the dollar is the ETF for the dollar is the UUP here. And it's, again, right at the highs of the day. And see how it climbs and the markets just go down. And again, markets trade inverse to the dollar. Always remember that, because that will be a key to understanding which way the markets are going to go. All right, if I scan through my watch list here, I'm seeing pretty much everything in the red. Google down 16. Apple's not taking too big of a hit. While the NASDAQ is down 2% or so, Apple's only down 1%. Amazon's the same way. So you are seeing a little bit of strength in a couple of the tech stocks out there, the leaders, I would say, in the tech sector. Even JP Morgan, I mean, it's down, but it's down about what the market is down. The other financials, however, are taking a bigger hit, down more than that. In fact, Bank of America, guys, take a look at Bank of America today. And Warren Buffett brought in this a while ago. He's now underwater on the position, although he has the preferred share, so he's getting a dividend of 6% a year no matter what, which is going to keep him in a perfect position. But Bank of America, guys, look at that drop on BAC right there, which actually is capitulation. Notice the volume spike right there. Then you get the bounce. But if we go to the daily chart on BAC, you're now at new 52-week lows as well, hitting a low of $5.60. Previous 52-week low before today was $6. So, I mean, it's taking a big hit. And the question is, does this get under $5? And we will be watching this very carefully and monitoring it. But again, the trades are there. The money is there for the taking. And again, it's all about price, pattern, and time. If you can use those key methodology points here at In the Money Stocks, which we will teach you, you will literally be on the right side of the trade 90% of the time and have the discipline to cut your losers as fast as you can to minimize that one loss every 10 trades or so. And again, free trial here, 7-day free trial. Come check us out. It's, again, free, right? If it's free, it's for me. Come join us here at In the Money Stocks and start reaping the rewards, profit with the pros, and become part of the elite group that is now becoming bigger than the hedge funds out there, better than the institutions in making money. Take care.